Welcome back to the Realm Podcast. As always, I'm your host, Robert Williams, and I am joined by Marco. Go ahead and introduce yourself here.
Yep. Hi, everyone. I'm Marco Mirabella. I'm the founder and CEO of Ensuro. So I'm originally Italian, but I'm currently in Taiwan. So I've been living in Asia for 7 years. Ended up here because of a university degree. So I did a double degree in Milan and the Polytechnic of Milan and Tongji University in Shanghai. And after that, I went into the venture capital space. So I was an analyst for SOSV, which is a venture capital fund that has different offices around the world. So one of them was in Shanghai, and and the other one was in Taipei. So I decided to move and then kind of be based here. And after the experience in the VC, I decided to go all in the crypto space. So I started a company called Cartesi. It's a layer two solution, essentially a solution that allows underlying blockchain to increase their computational throughput and their computational throughput. So you can have more transaction and every transaction there. So I stayed there for 2 years and a half. Eventually did a little bit of a jump back in the Web2 space. So working for a price comparison website, vertical search engine here in Taiwan. But afterwards, the crypto goal was too strong. So I decided to start Ensuro around 3 years ago now and put together the original team.
Right, yeah. And, the like I said, the crypto bug got you and kind of pulled you right back into it. So you said you're the CEO of Ensuro. So just spend a minute explaining kind of, what Ensuro is and how you're using the blockchain to kind of do what you couldn't without the blockchain.
Sure. Yeah. So Ensuro is a blockchain-based insurance company regulated by the Bermuda Monetary Authority. Essentially, we have a license as Insurance General Business and Digital Asset Business Class T from the BMA. And then these two licenses allow us to act as an insurance or reinsurance company that uses cryptocurrency as a solvency capital. Now, the solvency capital that we have currently sits in the form of a stable coin. So we're currently using USDC, which is a currency pegged 1-to-1 with the US dollar. And the capital is collected from different investors that they connect their wallet and deposit their funds into a liquidity pool that is written on top of Polygon, so a permissionless blockchain. Now, the capital that we collect in this pool is then used to provide underwriting capacity to risk partners that are providing insurance, protection, or warranties or different type of products. Now, the majority of these companies are providing products for users that are off chain. So what Ensuro does is essentially connecting the world of crypto, in particular DeFi or decentralized finance, with the world of insurance. So being a bridge within the Web2 space and with the Web3 space. Now the end consumer on the products actually don't know that they're dealing with a blockchain company in the back. So the entire complexity is isolated from them. However, using blockchain allow us to increase the operational efficiency, I would say, because the use of smart contracts allow us to cut a lot of inefficiency in the insurance value chain. So especially when dealing with the parametric insurance, there is a type of insurance that it's binary in nature. So for instance, the amount of rain is bigger than a certain level, or is this flight delayed or not, or the hurricane passes through a certain zip code. So you have a very precise input that leads to a very precise output. So this type of structure can be encoded in a smart contract, and you remove then the operation, the human interventions, ending up in lower cost for the final users and more transparency for the entire value chain.
Right. So you look at the raw data for what's happening to process your outcomes, as opposed to get this person's statement, get that person's statement. Oh, there's a conflicting statement. We got to resolve that. No, we just look at the raw data of, as you mentioned, the parametric is, was there enough rainfall this year in this area? No? Okay, here it's going to process a payout. So that's
Yeah.
definitely uh, a better direction. I mean, I've myself have seen plenty of times, even in cyber insurance, where it takes months to process claims simply because you have to collect not just logs from systems, but people's accounts of what happened. Oh, we got hacked. Oh, well, who let the hacker in? We got to figure out whose email got compromised. Why did it get compromised? But this person doesn't say they didn't do anything wrong. So now we got to track down other people. And well, it wasn't my account. Somebody else was using my account at the time, and then it just becomes a headache. But again, you're just looking at the raw data. Gets rid of a lot of the arguing for insurance companies. It's just, did it happen? Did it not happen?
Yeah, like and especially like we're using Oracle solutions, like there are tools that allows you to take data from that sideboard, process it, and put it on chain in order to trigger smart contracts. Then you remove something that is common in the insurance space. So as you were saying, like the claim assessment process is like something that it's like problematic on chain or on in insurance like a company. And the claim assessor, that is the one that it needs to determine whether or not you're going to get paid, is part of the same organization that it's the one that's going to pay. So that like traditionally you have like a big conflict of interest in when buying like an insurance policy. So like using like parametric like products and connecting with a third party like and trustless Oracle allows to remove like some of these like inefficiencies. So if Chainlink or another Oracle solution tell then in this particular location there's not enough rate, and the policy like is written on chain and say you that, then like the smart contracts automatically enact the payout. So there's no human intervention and there's no delays that might come through. So it's good for the users because you have a certainty of payout, and then it's good for like the brokers or the different type of parties in the insurance value chains because they can reduce costs and then be more competitive when providing like new products. However, we're seeing like that consumers like are like want different products, and more like consumers wants to immediate like a response and immediate like service. So it's kind of a tendency that we're seeing in the space, and blockchain can fit right in, especially when dealing with parametric insurance as mentioned, or even embedded insurance. So like you can have like an embedded insurance that is essentially in a protection that is inside a flow of a user purchase. So then the user can immediately purchase this product, and then the simplest it is and the most immediate it is, the better it is for the user. So we're seeing more and more like companies that are trying to get into this space and trying to find alternative like solution from traditional insurance.
Right. Okay. So I mean, the migration is happening. It's just slow. All right. So I mean, again, kind of dovetailing on what you said there and that idea. So what sort of challenges did you kind of face when building up Ensuro and the blockchain? I know there's a lot of hesitancy and you know some stereotypes when it comes to like the crypto people. So like, were there any challenges that you faced kind of building a company that so heavily uses blockchain?
Yeah, like we're seeing like the majority of the kind of the pushbacks are coming from the traditional insurance industry. So when we say that we're a blockchain company and that we're using cryptocurrency as a solvency capital, despite using stable coins, people are immediately associated with the most volatile and most like scammy project.
Mm-hmm.
So I say, okay, like you guys are using like a Dogecoin or like this meme coin as a way to back up
Right.
the risk. So essentially, like you have this stigma that it's associated with the crypto that you need first to overtake. So in Ensuro, we're using like stable coins that are essentially pegged with the US dollars, and sometimes I think they're like in the way they're structured, it's they give you additional like certainty compared to a traditional bank account. So if you use a circle for instance, there's the reserve of US dollars split into many different bank accounts that are like top tiers like banks in the world. and
Hmm.
then they have like a monthly like attestation from an accounting firm that says that the assets on chain are the same as the asset in the bank account. Now, if I was like using a traditional system and let's say like I was putting money in Silicon Valley Bank, all my eggs are in the same in one bank.
Hmm.
So essentially, like if something happens to the bank, I don't have the ability to fulfill the claims. In what USDC does is like they're trying to differentiate the risk and then give you like the option to redeem your token into US dollars. So they like if you look at it, probably like, the risk is it's lower than like putting all the eggs in a single bank. And that's something like they were trying to teach people and like trying to educate people. That's probably the main challenge that we're facing.
It's the education component is
Yeah.
the hard one, and I feel like that's what a lot of companies that use the blockchain and sort of any sort of crypto, they have that uphill battle of just having to convince people that this is a safe way to go. This is a safe thing. Like you said, you use stablecoin, which is far and away better than if you say, oh yeah, we use blockchain. People may think, oh, you use Dogecoin. It's like, no, why would we use that? Um, but yeah, that's I could definitely see that being a huge challenge and having to help educate. So, is there anything you guys are kind of doing in that sort of education space to try to impart knowledge on the customers
Yeah,
or
so we're trying
clients?
to like stand on the shoulders of like Circle and other giants in the stablecoin space that create like materials in order to educate like financial institution and other institution to enter in the space. It helps that we're seeing like a big financial institution that are starting to jump into the stable coin like wave. For instance, PayPal like recently like decided to launch their own stable coin in partnership with Paxos. So that's like they're all like pushes that are helping towards our end goal. And also another things that we're doing is Ensuro is a regulated entity in Bermuda. So we obtain a license as insurance, general business, and digital asset business. And that these two licenses combined allow us to act as our insurance company that uses cryptocurrencies as solvency capital. And in that instance, like Bermuda incorporate like stable coins and crypto in their solvency capital requirements.
Oh, okay.
So and that's like a big help. So the fact that we have a regulatory stamp when dealing with the client, and it's the fact that like an actual country is accepting this type of technology, it's is also like something that is supporting us.
Yeah, I'm sure that's a big help to add to the legitimacy of the blockchain. Um, so kind of a one more thing here is what is something you kind of learned in this space to let me rephrase that. What is something you learned throughout these challenges and something that you kind of wish that you could tell people ahead of time about either the technology, your company, or just in general, something that you've kind of picked up on that you wish the other people would pick up on as well?
Yeah, and essentially, like when looking at the crypto space in general, like we need to have a long like view, so a long-term view of the space. So when like in 2017 and every time there's a bull run, people think that the crypto is gonna like be go mainstream like the day after. So I don't think it's the case. So and whenever you build like a solution, you need to have like a long-term view. So we see that this solution has a like certain advantage and very strong advantages over the traditional system. So, but in the B2B space and in like regulated like space, things go slow. So that's something that you need to like account for. So having like a slow like view. So in terms of like a long term view, but try to move as much as possible in the short term. So whenever there's an action that you need to do, like try to do it as fast as possible. This iterative process, having like a long term view, like as an end goal. So that's something I learned like in these years. In general, like I'm seeing it also in the B2B space. So in traditional B2B companies, like when dealing with companies that are generally like, more or less adverse than retail, they want to see you there, you are around. They want to see you around for a bit and want to see you there like a stable company in order to then do a deal with you. And even so, even more so in financial institutions or regulated business. So people want stability, and people want to have like use cases and then test, see with their own, like touch with their own hands in order to then like do the leap of faith and then work with you.
Right.
So
Yeah, that's that. I mean, I definitely understand that. That's a big thing. People will look up a company and be like, "Oh, you've only been around for 6 months. Have you done anything yet?" And they just kind of sit there, and nobody wants to take that. Nobody wants to be the first risk, I suppose, for a company. But somebody's got to be it. And if it's a good
yeah,
idea, it's a good idea at the end of the day. So if a company's got the right product and the right services, who cares
yeah,
how
like
many
I mean,
people
I
there are?
saw a lot of companies like moving to the like permission blockchain. So it was the easiest thing to do. So you have pushbacks on traditional financial institution or traditional companies that are afraid to use the blockchain, like especially the permissionless nature and the transparent nature of a permissionless blockchain.
Hmm.
And then like they try to push you to kind of like in the permissioned space. So just for like clarify the difference between the two. Like a permissionless blockchain is a type of a blockchain where everyone can jump in and validate the transaction, and where the transactions are completely public. So you can go in an explorer and see like what happened since the beginning of time, like in on chain.
Hmm.
Whereas the permission blockchain is something like where the validators are a set of institutions that are pre-approved, and the data like sits within those type of institutions. Now, if you jump into that, the word, then I would argue that there's not much difference than a traditional database. Actually, you have a database that is much more expensive because you have redundancy and some delay on the propagation of information. And also, like you need to build all components like on top of it. On the permissionless blockchain, is you're having like an infrastructure that is a global. So you have people in India or people like in Latin America or people in US like trying to build infrastructure that you can that are all open source. So you can leverage this type of solution and build on top of it. Now that's where I believe the real cool thing about blockchain is. And if there's some pushback from traditional institution, it's something that you need to embrace, like and continue to building in order to prove like that kind of the philosophy and the main idea that you're and the main advantages over there. So that's my point of view here.
Yeah, I mean, and that's great. I mean, they need to build it out somehow, and leveraging as. I mean, I think that's one of the advantages of that. I mean, it kind of not to bring up a ill-fated fate, but the early days of file sharing. The more people that were around uploading that file, the better the system worked. Now, obviously, regulations and people have kind of stepped in with file sharing, and people got a little upset. But that concept of anybody around the world can kind of step into this thing and help process it. Um, I mean, I think that's kind of the concept that drove a lot of the original, the big push that made a lot of people go into crypto mining was that idea that hey, I could just buy a miner, set it up, and then I can now help be a part of the blockchain here with just whatever I have, whether it's just my graphics card running when I'm not playing a game or something, or I just buy an actual miner. However people could contribute, and I think that's just a really cool, concept. People creating these communities over all sorts of things they may not have known they were a community for otherwise. Um,
And also the concept of resilience that you can build on top of this is something that probably in developed countries it's difficult to grasp.
mhm.
So I mean, coming from Europe or being like in Taiwan, or like they have a good financial infrastructure even in the US. It's difficult to grasp like the fear that people have or the mistrust that people have in financial institutions. Like in countries like Argentina or like in some countries in Africa. So like blockchain, like with this resilience, like resilient infrastructure created an alternative for people, and that's where like you see like the core like and the real advantage and the real vision like that's behind this technology.
Oh
So
yeah.
people in like I spent like quite a long time in Argentina, and and people like got stolen of their assets. So they used to deposit like US dollars in their banks, and the US dollars that was deposited in the bank was seized by the government and replaced with pesos. So like in one night, like people like ended up like not having like savings anymore. And in fact, people there don't store like money in the bank. So now having like a solution like on chain where you can check the code and see like how it works is it's a real alternative for them. So and putting money in DeFi, even though you're subjected to smart contracts hack or hacks or different type of exploits, it's probably less risky than putting money in the banks where like someone might come and then like remove it from you, or like hybrid reflection might come, or capital controls might come and destroy your like purchasing power. So that's was very refreshing to be there and see like the application of this technology.
Oh yeah. I mean, when that's something, my American sensibilities, I probably wouldn't even think of, hey, the federal government could come in and just change the money in your bank account from one currency to another. But I mean, in America, maybe not. But in other countries, they'll be like, no, you're going to use this currency. You're using pesos. You're using rupees, whatever it is. Like they're going to change it, and But yeah, I mean, to that degree, yeah, absolutely, people will flock to blockchain and a completely open ledger where you can see transactions and everything that happens, just so it's public, so everybody sees what happens. There's no backdoor shady anything happening.
Yeah, and this concept, like kind of, we took this concept and expanded in the insurance space. So once you buy an insurance policy, like I mean, even in developed countries, like the trust in an insurance company to pay a claim is quite low across the board. So on chain, you have like the possibility of relying on code and being like and have almost certainty of payment whenever like an input happens. So that's like kind of like okay, like probably you cannot apply for money because like most of the countries don't understand it, but like trying to apply this concept of mistrust and then try to put trust on code. So that's like what like drove us to start Ensuro.
Right, it's building that trust.
Yep.
All right. Well, I think that will about wrap us up for this episode. Um, and thank you for watching or listening to the Realm podcast. And please don't forget to like and subscribe.